Hey, Buffy the Rate Slayer here at SunWest Mortgage Company with your weekly market insights brought to you by the Capital Markets Trading Desk. Every week, I break down what's happening in the economy, mortgage rates, and housing, breaking down the market so everyone can understand it. All right, let's get into it. The stock market had a mix of good and bad days. It started off strong and looked like it was on track to reach record highs, but that momentum slowed as the week went on. So investors shifted between feeling optimistic and cautious as they reacted to changing expectations about interest rates, developments around the world, and the start of a corporate earnings season. Lower inflation and stronger company earnings helped support the market at times, but renewed geopolitical tensions, rising energy prices, and weakness in semiconductor stocks created periods of pressure, causing the broader market to lose some of its momentum. So let's get right into the numbers then, shall we? Inflation showed more signs of cooling in June. Consumer prices fell for the first time in 6 years, while core inflation, which excludes more volatile items like food and energy, was unchanged from the previous month. The overall consumer price index, CPI, it declined 0.4% month over month, mainly because gasoline prices saw their biggest drop since 2022. This reinforced expectations that inflation pressures continue to ease. Other economic data also pointed to a steady but slowing economy. U.S. retail sales rose a modest 0.2% in June after an upwardly revised 1% increase in May. Lower gasoline prices weighed on the overall retail sales number, but consumers continue to spend, showing that consumer demand remains relatively resilient. Inflation at the wholesale level also continued to improve. The core producer price index, PPI, which excludes food and energy, it increased 4.7% year over year in June, coming in below market expectations. Total PPI declined 0.3% month over month, but together these reports provided another reminder that lower energy prices can play an important role in helping inflation continue to cool. Well, what's up with housing? All right, so higher mortgage rates continued to put pressure on the housing market. The average interest rate for a 30-year fixed mortgage rose 7 basis points to 6.65% for the week ending July 10th, reaching its highest level since August of 2025. As borrowing costs increased, buying a home became more expensive for many potential buyers. That higher cost of borrowing showed up in mortgage activity. MBA mortgage applications declined 2.7%, with applications to purchase a home falling 7.3% to their lowest level since February. Refinancing activity, however, increased 3.5% as some homeowners still took advantage of opportunities to adjust their existing mortgages. On to the labor market, so let's just talk about jobs. The U.S. labor market continued to show resilience. Initial jobless claims dropped by 8,000 to 208,000 for the week ending July 11th, while continuing claims declined to 1.81 million. Both figures came in below expectations. Even with ongoing corporate layoff announcements, labor market conditions remain stable, and job cuts have had limited impact on the overall unemployment rate. An index that measures overall housing market conditions fell 2 points to 34 this month. The index has now remained below 40 for 15 consecutive months, marking the longest stretch since 2012 and highlighting the ongoing challenges facing the home building industry. The market continues to balance a mix of encouraging and challenging news. Inflation has been showing signs of cooling, and the economy has remained more resilient than many expected, but uncertainty is still keeping investors on edge. In the weeks ahead, investors will be watching closely for new economic data, corporate earnings reports, and signals about future interest rate decisions to help determine where the market may head next. And that's a wrap on this week's Market Insights. If you found this video informative, hit that like button, follow for more weekly market insights, and share this with someone who just wants to stay ahead of what's happening in housing, mortgage rates, and the economy overall. Until next week, stay informed, stay ahead of the market, and remember, nothing is beyond reach. Buffy out.